What's up, guys? It's Rob here, and today we've got some good news for the stock market. And you guys can probably already tell there's been some good news because the prices of very many stocks are actually moving up in a pretty big way. It's been a really great day for all three of the major indexes. You can see the SPY right here, and it has broken out to new highs over the past couple of weeks. You can see the QQQ, the same thing, right? Tech stocks are doing well, and small market cap stocks in the Russells are also doing very well. So all three of the major indexes are doing pretty darn good. We're seeing positive movements on all of them. They're all starting to break out to new highs ever since this decline had begun and this rally has been forming. We haven't seen prices where they're at now. So good stuff for these three major indexes. Now, what's been causing this? There are a couple of things that have been going on. The very first one is OPEC. Okay, OPEC, a conglomerate of oil-producing nations, has decided to raise output faster than people were expecting they would. So more oil is going to be coming onto the market. Then that's viewed as a very good thing because the price of oil over the past couple of months has gotten completely out of control. If you look at the past year, oil has been on the rise, and we actually, even just today, are hitting new highs over the past couple of months. We're almost hitting new highs for the year. If we went up just another $10 to $12, I think we'd be hitting new highs for the year. Crazy stuff to see, right? We're at $117 per barrel of crude, and people are getting worried because the price of oil really indicates where the prices of many things could be going, right? Oil is huge for transportation, and pretty much everything that you buy has been transported at one time or another. So that feeds into essentially a cycle where things just get more and more expensive the higher the price of oil goes. In addition, oil is used to produce energy, and a lot of energy is used in producing all kinds of stuff. So the price of oil really is a big indicator of prices for a lot of things in the economy. And when the price of oil goes up, we tend to see more inflation. And so it's a very bad thing that the price of oil has been rising, but the fact that OPEC is going to be making more oil is viewed as very good for the market. Now, we also had this lady, Loretta Mester, talking today. And for those of you who don't know, this is the Cleveland Federal Reserve Bank president, all right? So one of, I believe, 12 members of the FOMC. Now, she said today on this interview that she was on that the Federal Reserve needs to raise rates by a half of a percentage point at each of its next two meetings, so essentially by 1% during its next two meetings, and then assess if inflation is moderated enough to slow the pace of rate hikes or if it needs to jack them up further. Now, at face value, that doesn't sound like good news, right? You hear that she's going to be, at least that she's trying to be, jacking up rates by half a percentage point at the next two meetings. And nobody likes hearing about rate hikes when you're investing in the stock market, right? When you're investing in the stock market, you'd rather rates be lower because as rates rise, that creates an inverse incentive to invest, right? The higher rates are, the higher return you can get just holding cash, putting it in a savings account, and the less sense it makes to be investing in stocks. If you can already get a sizable return investing just in a savings account, right? You don't need to be buying stocks if you can get a big return just from interest rates. However, what a lot of people also realize is that so far, this is what the Fed has done with their rate hikes. Now, it's not that much when you look at it on this very zoomed in chart. Looking back to 2019, it's nowhere near where we were at in 2019. And it's especially low if you zoom out even further back to, say, 2006, 2007. Rates were much higher then. And it just keeps on looking smaller and smaller the further back you go. I mean, it's very small compared to what we were at in the 80s or the 90s even. And once again, even in 2019, we were at much higher rates. Now, obviously, we're going to be raising the rates a little bit further, but nobody actually expects the Fed to raise rates enough to match the inflation rate. And so for a lot of people, it doesn't make sense to be holding all this cash if your cash is inflating away at 8.3% per year. And the Fed, even if they triple interest rates from where they're at now, maybe they're at 3%. Or if they 5x them, maybe they're at 5%. And that's still not really matching the 8% inflation rate that a lot of people are experiencing. So a lot of people are thinking, why would I be holding cash when it's inflating way faster than what the Fed is willing to have us is willing to give us in interest rates, right? So a lot of people are potentially betting that stocks could be a better bet than that the price of stocks will be increasing because as the costs of goods increase, companies' earnings will be rising, not necessarily in terms of their percentage gain on the price of goods, but in terms of the dollar value, and thus the dollar value of stocks would go up as well, right? They'd still be making the same margins, the same percentages in terms of what they're selling, and then they'd be selling their products for a little bit more dollar-wise to match the inflation rate, and then that would potentially translate into stock prices as well, right? That's my expectation. I do expect that stock prices will probably continue to rise throughout the course of this inflation. Thus far, we have unfortunately seen some bearish movements in the stock market. mostly due to fears from Russia and Ukraine and skyrocketing oil prices, and because the Fed has been raising rates. A lot of people have been worried about that. That is not a big fear on my mind, though, right? I don't think the Fed is really going to blast rates through the roof. I think that they're more bark than they are bite. At least that's how it's tended to be in the past. We're going to see. Maybe they'll do it. Maybe they'll really skyrocket rates to match inflation, but I don't think that's going to be the case, right? I think they're going to be a little bit more dovish than what people are expecting, and we'll see what happens with that, right? But that's my expectation at the moment. I do expect that the stock market's probably a better place to have my money than just sitting in cash in a savings account trying to collect whatever the Fed is willing to raise the interest rates to. But that's just my opinion. And I think that as of today, that's a lot of other people's opinions, right? You're seeing stock prices move up over the past week or so. And hopefully this rally will continue. Hopefully this will be the return of stocks, and hopefully they'll continue to move up until they make new all-time highs. And we'll see if that actually happens. Hopefully that'll be the case. But other than that, guys, that's what we've got in this video. Just wanted to update you on what OPEC was doing, what the Fed was talking about, and might give you my personal opinions on the stock market. So other than that, guys, I know this was a quick one. I'll see you in the next one. Don't forget to like, comment, subscribe. Keep in mind, none of this was financial advice. And I'll see you hopefully tomorrow for a very green Friday. Let's hope we have that. Other than that, guys, bye.